Markets Now is brought to you by the 5-year anniversary of Brevant Seeds. Here's to 5 years of not just winning, but collecting one game-changing W after another. See all of our wins at Brevant.com/wins.
Welcome to Markets Now. I'm Michelle Rook with Ted Seifried of Zaner Hedge. A mixed day in grain and livestock futures trade over in the grains. We did see corn and wheat higher, soybeans lower. So Ted, let's start off talking about the corn market. Did we just see short covering today, or was it some of these rumors about China business that kind of pushed the market?
I think it's a bit of both, right? We have been seeing some of these daily flash sales to unknown destinations. I don't personally think that is through China. There has been talk of Chinese interest out of the Pacific Northwest, and we did see port values kind of spike there, basis spike a little bit. That doesn't necessarily mean China, though, Michelle. It could be one of our normal customers, like Japan, for example, looking for a bigger order. I don't know why China would buy U.S. corn. It wasn't part of the agreement, which is yet to be signed. So unless it was politically motivated, I would think China would want to go to Brazil. They have this newish relationship with Brazil when it comes to their corn. I think they want to protect their relationships with Brazil as much as possible because they're really their best friend when it comes to agricultural trade. So I don't know. I'm skeptical of the Chinese buying theory. We did bounce off our 100-day moving average. We saved a breakdown below the neckline of what could potentially be a head and shoulders topping formation in corn. And when you do that, your shorts get a little bit tired, especially when you look at the end of the year and they say, okay, well, I'm going to step away and we'll see what it looks like, in a couple of weeks. So I think short covering was the main thing, but the talk or possibility of China buying may have been the spark to that, or may have been why we held that neckline. Either way, all that coming together, and we've had a nice little 2-day bounce here. Now, if we were able to get up and over that 200-day moving average for the fourth time, close above it, and then not break down the very next day like we have the previous 3 times. We could potentially break out to the upside and really negate this potential head and shoulders formation. So corn remains in this sort of decision-making time frame and chart pattern. We've been very sideways for about a month and a half. We're just waiting for some sort of catalyst, I think, to move this market. And that might not come until the January WASDE and crop production report.
But Ted, we also, when we get above the 200-day moving average in corn, we get farmers selling. That's also capping the rally, isn't it?
Yeah, right. I mean, it's at the recent highs. So, guys have resting orders there. I think there's a lot of resting orders around 450 in the March corn. So that does create a bit of a headwind. But I do wonder if guys might start pulling those orders as we get closer to that January report, with the idea that maybe the USDA is going to lower that yield like they did last year in kind of similar circumstances as far as a dry August. Like, we saw that 2 years in a row.
But do you need 4-5 bushel acre yield cut in order to get the bulls excited and get below 2 billion bushel ending stocks?
Yeah, I mean, that's a great question. What would they do with feed and residual, Michelle? Right. A lot of people will suggest that feed and residual number is just really, really high, and there's a lot of cushion there for a lower production number to be mostly offset by lower demand, especially in the feed and residual. I don't think it'd be completely offset. I do think if you cut 2 or 3 bushel an acre off of corn, we'll get below a 2 billion bushel carryover, but I don't know about significantly below 2 billion bushel. And therefore, yeah, it is kind of tough to build a longer term bullish scenario for corn unless it is a much bigger cut on yield than, 2 or 3 bushel.
Wheat market was higher, but did it just follow corn, or was this short covering because we just were down at contract low areas?
Wheat has gotten so oversold. We've made new contract low and new contract low closes in the March Chicago wheat the last 2 days. We've gotten below 30% on a relative strength index. And with corn higher, I think they just the selling just paused for wheat. And it was an inside trade day. It really didn't do anything for a chart. I guess the most positive thing that we can say is that we didn't make a new contract low today, and that we did close slightly positive. But I mean, the problem for wheat is that just the world production is so strong this year. There isn't any major production issue in any of the major wheat producers or wheat exporters of the world. There's just a lot of the USDA's had to continue to raise the world production number think we're 30 million metric tons off of the original number they had a few months ago.
Well, China canceling a couple cargoes of white wheat did not help the market psychology either, did it?
No, right. Anytime China cancels anything, that really does not help the market psychology. For a moment there, we were kind of maybe getting excited that China could come in for a bigger amount, but then when they cancel, that really takes that off the table.
What about soybeans? We're lower, making new lows for the move again on Thursday. Why is that market continued to slide here fundamentally when we're continuing to see export business from China come at the market?
Right. I mean, we had the big run up starting October 1st and into the middle of November based on the idea that, hey, we're going to get a trade deal with China, which, by the way, has not been signed yet, and no word on when that might get signed. But they are making their purchases. The problem is that I think the markets realized that 12 million metric tons probably isn't enough to get us to the USDA's full marketing year expectations for our exports, and that they'll probably have to cut exports again if China doesn't buy above and beyond that 12 million metric tons. And while the buying is good, the pace does not suggest necessarily that they're going to outperform on that one. We also look at what's going on with the rest of the world in South America, and there's not a great reason for China to come in and continue to buy U.S. beans if it isn't politically motivated. So I think there's just maybe a little bit of I hate to say it, but buy the rumor, sell the fact, in the realization that it's just 12 million metric tons. It's not anywhere where it's not anywhere near the normal business China would be doing. And the other thing, Michelle, is that the funds had gotten really, really long. Right. I mean, record for the month of November in the time frame during the government shutdown, and nobody knew about that. The trade guesses or the analyst guesses were so far off. They weren't even half of what the funds actually accumulated as far as their long position. And the funds have just simply lost interest in the story. And so getting out of that position, it would seem, again, we're not sure because we're not caught up on the commitment to traders data. But, after having that record long position for the time of year, they're getting out of that. And again, they just don't seem to be, they don't have that excitement that they had before. So that's turned the price action really rather negative in soybeans.
Let's talk about the technical reasons why the market is moving lower, considering that we filled chart gaps and then we closed below those. That's pretty negative, isn't it?
Yeah, it's really negative, right? And so we had that head and shoulders topping formation that everybody was talking about. It's one of the most basic technical analyst things you can do on a chart. And it was so textbook, Michelle. I mean, it's almost picture perfect. It is something that, in future classes on teaching technical analysis, that'll be a great one to point to and be like, this is a perfect head and shoulders formation. And it was so telegraphed. And when it broke down and you broke through that neckline, like we talked about in corn, had that potential, but saved it. But soybeans did it. And so that really caused that technical slide. Now, the next order of business was to obviously target that gap. That was a big, big target on the chart. And when you talk about gaps in a bull market, if you go down and you get into a gap below, but don't fill it and then turn around, that's a pretty bullish scenario. The second possibility is you fill the gap, but then bounce off of it and you don't close below the low end of the gap. That's a mildly bullish technical pattern, probably suggests sideways trade. When you fill a gap and you close below it, like we have in soybeans, that's a rather negative technical pattern. And we have followed through to the downside. Today was the first time that we closed below the 200-day moving average in March soybeans since middle of October. And we are rather oversold. So we could be due for a bit of a relief bounce, but it isn't a good looking chart. You really wanted to see it hold that gap, or at least hold a partial gap fill and then bounce back. I think that a lot of people were expecting that. And when it didn't happen, I think that caused a lot of the sentiment to turn negative.
Cattle market down on Thursday. Was this just profit taking because we continued to run up into these chart resistance areas?
Yeah, I mean, the good news there is that both cattle and feeders did close well off their lows. So, we didn't completely fall apart after running into the 100-day moving average, major moving average, pretty much 5 days in a row, not being able to break through it and break out to the upside and fill the gap above us. Finally, yeah, the market just kind of gave in a little bit, but it started to come back a little bit towards the end. So that, I think, leaves us in a position where we might not be done challenging that upside, trying to fill that gap. And, like we just talked about in soybeans, gaps can mean a lot of things, and how the markets treat gaps can be very telling. And for the moment, sort of the opposite of soybeans, where we were hoping it would partially fill the gap and then turn around. This is that situation where in a bear market or in a break off of the highs in what was a long-term bull market, big break or correction down, go back, partially fill that gap, can't completely fill that gap. That's a pretty negative sign. So if we can't do that sometime in the relatively near future, the technicals are going to start to turn a lot more negative for the cattle market. But like I said, the bounce off the lows that we had today, I think still leave that gap fill as a possibility, a breakout over the 100-day moving average as a possibility. But the clock is going to be really ticking now, Michelle.
Hog market was able to close higher, though, on Thursday. And so is this rally that we've been seeing driven by the funds, or are we seeing the bottom finally seasonally and like the cash on the cutout values helping us out?
I think we are seeing maybe the seasonal lows here. I think we overcorrected a little bit too much to the downside. I would like to see more upside here for the hogs. I think the funds are getting a little bit more interested in being long again. And we're in the holiday ham time frame. So, I mean, there's that. And a bit of an interesting conversation for the hogs or for pork is, if we are worried about a economic turn down after the first of the year, cheaper substitutes like pork might become more attractive for buyers at the butcher's counter. So it could be sort of a bit of a counter, the investors looking at what could be something that we can use to hedge against some sort of economic pullback that is possible after we get through the holiday season.
Yeah, good point. Thanks so much, Ted Seifried, Zaner, Hedge. That's Markets Now.
You were right.
You were right.
You were right.
Well, you were right. When you choose your seed brand, there's winning, and then there's...
You were right. Should have gone with Brevant seeds.
When you choose Brevant seeds, you don't just win. You get to be right. Don't just win. Win. Talk with your retailer or visit Brevant.com/win to get started.